Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings and try to see if these companies are really pulling a fast one on us. Get ready, because Aura Biosciences just dropped a report that's got quite the story to tell. A story of big losses, big plans, and a whole lot of waiting. Today we are looking at Aura Biosciences Incorporated latest quarterly report. This company is all about developing new treatments for solid tumors, aiming to improve how we fight cancer. Their main focus right now is on a drug called belsupercapsurotelocan, or Belsar for short. They are hoping this will be a game changer, especially in treating eye cancers where currently the options are pretty grim and often lead to vision loss. Let's get right into the numbers because that's where the real story often lies. For the 3 months ending the 30th of September of 2025, Aura Biosciences reported a net loss of over $26 million. For the same period in 2024, the loss was about $21 million. That's a significant increase in losses. Now, if we look at the longer 9-month period, the picture gets even clearer. For the first 9 months of 2025, Aura Biosciences reported a net loss of over $80 million. That's a huge jump from the nearly $61 million loss in the same period of 2024. This tells us the company is spending a lot more money and it hasn't generated any revenue from selling products yet. And why are they losing so much money? Well, most of it is going into research and development. For the 3 months ending the 30th of September 2025, research and development expenses were over $22 million, up from about $17 million in 2024. This jump is mainly because they are pushing ahead with their main drug trials on the 9-month comparison. Research and development costs shot up to almost $68.5 million in 2025 from around $51 million in 2024. This is a consistent trend of increasing investment in trying to get their drug candidates approved. On the flip side, their general and administrative expenses have actually gone down slightly, which is interesting. For the 3 months ending the 30th of September 2025, these costs were just under $5.7 million, down from over $6 million in 2024. The 9-month figures show a similar small decrease. This suggests they might be getting more efficient in their general operations, even as they spend more on research. Now let's talk about money in the bank. As of the 30th of September 2025, Aura Biosciences had almost $48.4 million in cash and cash equivalents. This is up from about $26.2 million at the end of 2024. They also have marketable securities worth over $114 million. So, while they are burning through cash, they still have a substantial amount of liquid assets. In fact, they stated they believe their existing cash and marketable securities will be enough to keep them going through at least the first half of 2027. That's a decent runway, but developing drugs is incredibly expensive, so they'll likely need to raise more money down the line. Looking at the balance sheet, their total assets have grown to over $190 million by September 2025, up from around $182.5 million at the end of 2024. On the other side, their liabilities remain manageable, under $33.5 million. The big story in stockholders' equity is the increase in additional paid-in capital, which is up to over $611 million from about $526 million at the end of 2024. This increase comes from selling more stock, as seen in their follow-on offerings and at the market activity mentioned in the report. This shows they are successfully raising capital, but it also means more shares are out there, potentially diluting existing shareholders. They had a major follow on offering back in May 2025, bringing in about $69.9 million in net proceeds. This is crucial for funding their ongoing trials and operations. It also means the company is actively managing its finances by selling stock to fuel its growth, a common strategy for biotech firms that aren't yet profitable. Now, let's touch on the risks. Aura Biosciences faces a mountain of them. They openly admit they have incurred significant net losses and expect to continue doing so. Their entire business hinges on the success of Belsar, their one and only product candidate so far. If Belsar fails in trials or doesn't get approved, their future looks incredibly bleak. They are also heavily reliant on third-party companies for clinical trials and manufacturing, which adds another layer of risk if those partners don't perform or if there are supply chain issues. They mentioned getting a special protocol assessment for their phase 3 trial, which sounds good, but they are quick to point out this does not guarantee approval. This is a critical distinction people often miss. It means the FDA has agreed the trial design is reasonable for seeking approval, but it absolutely does not mean the drug is approved. The trial still needs to succeed, and the final FDA decision rests on the totality of the data. The outlook for revenue is also very clear. They say it directly, they have no products approved for sale, and do not expect to generate revenue in the near future, if ever. Everything hinges on Belsar getting that green light from regulators. Their strategy is pretty much all in on Belsar. They are betting big on this drug to treat early choroidal melanoma and other cancers. The clinical data they have so far looks promising enough for them to push forward, but the late stage trials are where most drugs fail. So, what is the takeaway? Aura Biosciences is in a high stakes race. They're burning cash at an accelerating rate, but have managed to raise significant capital from stock sales. The success of Belsar is their entire future. They have enough runway for now, but the path ahead is expensive and fraught with risk. They are making calculated gambles, pouring money into research, hoping for a big payoff. It's a classic biotech story of high risk, high reward. Alright, that is our deep dive into Aura Biosciences' latest filing. What is your take on these numbers and what they signal for the company's future? Do you think Belsar has a shot at changing cancer treatment? Or is it too risky? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And hey, if you want to join a community discussing these kinds of insights and get even more market intelligence, check out our Discord server. The link is in the description. Thanks for watching. See you next time.